Hello everyone, this is today's video analysis for March 6, 2019. Today we're looking at the EURUSD, the euro versus the US dollar for today's trade analysis. We have seen over the past week or so the euro has been falling from resistance. We look at the blue zone and the black trend line and the 100 period moving average all converging right here into 1.1370, 1.1395. Last week, 1, 2, 3, 4, 5 days, we saw the market pressuring into that blue shaded area underneath the 114 moving average, and again the black trend line, and the market has now fallen off of there in the direction of what has been a majority of the trending action anyway, which has been short here for the euro dollar. We've seen the US dollar this week have a pretty good week. It's been pressuring higher so far this week. Of course, there's a lot of news yet to come this week, but we've seen the US dollar doing pretty well this week, finding resistance right now. But that rise of the dollar has been sending the euro dollar lower and pressuring now through what was support yesterday and the day before, finding some support right around 113.35, 113.10. That's the green shaded area. Let's zoom it in on this a little bit. A couple of things I want to point out about the green shaded area, 13.10, 13.35. Go back in time a little bit. Let's go back to the black circles. Both black circles ended up being what were false breakouts. Sure, the first one did touch all the way down to the orange zone, but the next day opens up and suddenly pushes back above the green zones here. Didn't make it all the way down to the orange zone. Next day opens up, turns back around. So these are cautionary tales for us today. Both of these times we had a red candle or bearish candle close under the green zone, a blue candle or bullish candle open under the green zone, but that bullish candle just turns around, and we never saw the market completely stay underneath that green shaded area. So if you take that example of the two black circles and you go back to our current candle, you know, if today suddenly turns significantly bullish, we could see it be just like those two over there. It doesn't have to be, but that's what we're being cautious about, is that staying underneath 113.10 or above 113.10 could tell the tale for the next couple of days. Here at the blue circle, we had several days stay well underneath that orange zone for 1, 2, 3, 4, 5, 6 days. We were underneath the green zone down to the orange zone. And so that's really kind of the price action we're looking for. We're looking for the market to stay under the green zone as long as the US dollar continues to appreciate, and we don't want it to get back above the green zone. If we have any inclination to go short here and stay with the current direction of the trend, that's what we're looking for. Stay under the green zone, target back down to the orange zone. So we're looking for trade setups that would give us an opportunity to trade that. And we already know what the risk is. At this point, we would apply stop losses, and our risk is above the green zone because, like I said, we don't want it to get back above there. So under here. So do we trade it now? That's a good question. You know, I don't want to fall prey to the false breakout like what happens in the black circles. There's increased risk right now that happens. I need it to actually stay underneath there if I'm going to have increased confidence that it's going to go down to the orange zone. 4-hour time frame tells a little bit of a different story, as we've clearly seen the 4-hour time frame staying underneath that green zone without any real significant hesitation. It has stayed underneath there. So this may be our first clue right here that we could be looking for an opportunity to go short now that we're underneath it. I mean, really, if you just look at the opposite scenario here, and I'll just draw a wider black circle here. If you look at the opposite scenario here, it sat on top of the green zone for a couple of days and then eventually went to the blue zone. So in the same way it sat on top of the green zone here and eventually went up, we're now seeing it stay under the green zone here, and our anticipation is, as long as the US dollar continues to have a good week, we look for it to target back down to the green zone or lower. So if you're looking for an opportunity on the euro dollar today, my expectation is, for the time being, that we're looking for it to stay under the green zone, target the orange zone or lower if of course it can break that orange zone, and the risk is that it gets right back above the green zone and 13.35 for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.